So first question, how is everybody feeling today? So if you could, if you don't mind, in your chat box, just pop in there how you're feeling today, please. Couple of weeks into lockdown, how are we getting on? Anyone going stir crazy yet? Got good, feeling fabulous, pretty good, 8 out of 10. Chipper, I like that word, fantastic. Cabin fever, oh my goodness. Like a juggler, children and work. Well, I hope you don't jopper any of your kids. That would be a bit of a shame. Feeling great, great, thanks. Good, right, fantastic. Getting into a routine. Yeah, absolutely, good, good, good. Well, I hope that routine will translate into some fabulous habits that will really help you, not just in the next 90 days, let's say, or while you're surviving coronavirus, but also to take forward with your businesses as you come out of coronavirus. It would be great to think that one of the positives that comes out of this lockdown is that people develop some fantastic new habits that they take forward with their businesses. And one of those habits that I really want to encourage is cash flow management. Now, I was going to be talking about digital marketing today, but I talk a lot about digital marketing. So let's leave digital marketing for another day. We're going to do that in a couple of weeks' time. But today, I really want to talk about cash, because cash is king. I'm sure that you'll agree. And if ever there has been a time in history where those three words have been more important, I don't think it's ever been more important than now. We need to be really carefully managing our cash during this particular crisis. So let's get started. What I'm going to be doing, I'm going to be covering some common cash flow mistakes that people make. And as I said earlier on, I also have some fantastic assistants on this call today. I'm just having a look through the list and see how many accountants I've got on the call. If I don't know you, it may well be that I don't know that you're an accountant. So please raise your hand on this call if you are actually an accountant. Duncan, that includes you, by the way. I think I've just got one accountant on the call. Okay, so we've got Duncan on the call, and we're going to make sure that we defer to Duncan during this process as well. Okay, first massive mistake that people make when it comes to cash flow management, relying on their bank balance. I'm actually astonished at the amount of people who say, we never forecast our bank, we never forecast our cash because there's always money in the bank. So in your chat boxes, please, why is that a mistake? Why is it a mistake to rely on just looking at your bank balance to manage your cash? In your chat box, please. Why is that a mistake? Awareness of upcoming bills, not a true right now picture, or maybe even not a true picture right now, doesn't tell you the future of that balance. Short-sighted vision. You need to know where the money actually, what does that say? You need to know where the money actually goes, because you owe money out and might not get your money owed in. That's right, you need to know what's coming in. Absolutely, all very relevant. You see, cash in the bank is what we call a lagging indicator. Okay, just because you have enough money today doesn't mean you're going to have it tomorrow. A growing business will burn through cash quicker than you might imagine. So we need to be certain that there is enough cash for growth, because that's a real challenge. A lot of people think that just because their business is profitable and growing, that means that their cash is going to be okay. Not true. We've got to be forecasting that cash. Plus, there's also a balance to be had for keeping cash in the bank for working capital or even a rainy day and putting it to work for you in other investments. So I have seen people come across with this before, and they've traditionally, all they've ever done to know whether the business is doing well is looked at how much cash there is in the bank. Now, I would say that cash is a really important key performance indicator. Cash in the bank is definitely a really important key performance indicator. It's probably the number one. What is it they say? Turnover is for vanity, profit is for sanity, cash is reality. And it's the truth. However, just relying on what's in your bank at any one time because it is a lagging indicator, it's not going to be sufficient. So that's mistake number one that people make. Mistake number two, setting the wrong credit limits. Don't set the wrong credit limits for your customers, especially without checking their credit worthiness. You might even consider credit insurance if you're in one of those high-risk industries. But limits also need to be reviewed on a regular basis and adjusted. Some clients will be downgraded, so you need to be alerted if this happens and not just assume because you've never had a problem with them before. Maybe you've been working with them for 5 years and you've never had a problem before, that everything is still fine with them. You know, when it comes to it, it would actually be better to take a short-term revenue hit if you stop trading with them rather than suffering a bad debt from a client. So here's a question for you. Who is using currently, raise your hand please, if you are currently using a credit checking service. Raise your hand if you are. So if you're using a credit checking service to check the credit worthiness of your clients. So I've got a few people who are. So the first person I'm going to defer to, and it won't be for the last time today, is Duncan. So Duncan, you should be unmuted now. Tell us about a credit checking service that you recommend.
Well, we use Credit Safe.
Brilliant.
One of the reasons we do a credit check on all clients is for anti-money laundering purposes.
Right.
But we also want to get an understanding that the client runs their business well, hasn't collected CCJs, and if they do have any issues, they may well not know about them. So we can bring them to their attention and get them resolved.
So do Credit Safe alert you as well if one of your clients' credit scores have been downgraded?
Yes, every time there's a change, we get an email.
Fantastic. So would you recommend to the other people on this call that they use that?
I think Credit Safe is excellent. There are other ones out there, but Credit Safe is very good. Okay,
so thank you very much for that, Duncan. So please raise your hand if you are using a credit checking service other than Credit Safe. So let's speak to Corn. Corn, you are now self-muted. You should be able to unmute yourself and talk to us, please.
Hi, good day, everybody. Yes, I'm working for Experian, which is a bureau itself. So I was interested in what you guys have to say and specifically what you are getting up to. We got a platform with in fact two sides, which is your CI side, which is your consumer information side, and then your BI side, which is your business side. And it's so with COVID-19 virus to look at what your clients are going to do in the future from not just from a scoring perspective, but analytical perspective, and not just vetting them. From a vetting side, it's easy from a CI side, but from a BI side, what companies do as well, they look at it. And I love the previous gentleman's suggestion regarding.
Okay, Corn, I'm just going to let you know now, your internet seems to be jumping in and out. In fact, I think we might have lost you. I think we might have lost him altogether. He's clearly in a part of the world where internet is not working all that well. So apologies there, ladies and gentlemen. We lost Corn, but if we get him back, we'll ask him to put his contact details in the chat box. And if you wish to speak to him, he obviously works for Experian, so he's probably going to tell us that Experian is exactly the credit service that you should be using. Is there anybody else on the line here who's using a credit service other than Credit Safe or Experian? Raise your hand if you are. No. Okay. Well, there are others available, so you might want to do some of your own due diligence and your own research to see what is out there. But certainly, the common mistake is that people set the wrong credit limits without doing credit checks on their clients. The other thing that they do is they don't check on a regular basis to make sure that their clients' credit scores haven't been downgraded, and they take it for granted that just because they've got a great trading relationship with somebody, that means everything's okay. Clearly, we're now living in a world where things are changing very, very quickly, and I would recommend that you're very, very careful about that sort of thing going forward. Next, not sticking to your credit terms. So you put credit terms in place, and then you don't stick to them. Firstly, make sure that your credit terms are favorable to you. You're not in business to be abused by your customers or anyone else for that matter. A healthy business relationship, as I've said millions of times, is based on a win-win. But people say, oh, but it's the norm in our industry. Well, I say, challenge the flipping norm. Is your service great? Do you sell outstanding products of exceptional quality? If the answer is yes, then make sure that they're on your terms. Now, here's the thing. Sometimes people have worry over this because they think that because it maybe gives them a competitive disadvantage if they want to set their credit terms differently from what all their competitors are. But here's a question for you. Have you developed a great niche? Now, if you haven't developed a great niche yet within your business, then it's not just credit terms. There's going to be all sorts of other things that you're going to be missing out on. In a few weeks' time, I think it's probably in about 4 weeks' time, on a Tuesday morning for Profit Club, I'm going to be going through the benefits of creating a great niche within your marketplace. And I'm going to be delving into quite a lot of detail about how you position your unique selling proposition, your points of difference, anything that you can guarantee, and how you marry that up with the correct target market. Because I'm sure you'll agree with me, you'll be wanting to deal with A and B grade customers. I'm just going to bring Duncan in on this one as well. So Duncan, you're free to speak. Off you go.
Thank you, Stuart. Can I just offer an additional bit of advice to what you just said there? In terms of sticking to your credit limits, if you're also really consistent with applying them as well, so that when a client's late paying you, that then they get an email that day or the day later, or they get a letter or a phone call, because you'll then get a reputation with your clients as someone who has to be paid on time. Whereas if you get a reputation for being a bit hit and miss with it, they know they can put you to the bottom of the pile. They probably will do when the pressure starts to pile on them.
Yeah, absolutely. So, what we're talking about here is stick to your credit limits and be absolutely rigid with it. If they know that you've got that habit of following some sort of procedure, then they know that you're not somebody to be messed with. Is that right?
Spot on.
Okay, fabulous. Don't let people dictate terms to you guys. It's going to cause you far too much pain, okay? Review your credit limits regularly as well and challenge the limits. Life is far too short for sleepless nights. We've got another accountant that's joined us on the call today as well. So I'm just going to say hello to Teresa. Hello, Teresa. You are unmute. You're self-muted. If you want to unmute yourself, you can say hello.
Hi, Stuart.
Hello, how are you? Are you joining us from your caravan?
My motorhome, yes.
Sorry, motorhome. My apologies, motorhome. Please.
I've got my street cred to maintain.
Well, I called it a holiday home last time, and now I've called it a caravan, but we can finally get it right. It's a motorhome. Listen, Teresa, thank you very much for joining us here today as well. Obviously, if at any time through this presentation you want to interject and add some value, if you just want to raise your hand, if we could just have a quick practice, raise your hand for me, Teresa.
There we go.
Down at the bottom in the middle. Fantastic. Thank you very much. So for any time during the presentation you want to interject and offer some value to the people on the line, please just raise your hand and that would be great. If you could now mute yourself back up again, that would be great. Okay, so let's have a look at number 4. Not managing the money that you are owed and the money that we owe as well. In other words, people don't track. They don't track it, or they might track it, but they don't actually take actions when things aren't as they should be. In other words, they allow customers to get away with it. So in your chat boxes, why do people allow their customers to do that? Why do people allow their customers to get away with it? They don't want to lose them. Absolutely, yeah. They don't want to lose them. Fear of customers switching. Fear of a bad online review. Because they're too busy doing other things. Lack of a system. All of those things. All of those things. Embarrassment. Some people are embarrassed to ask. Worry about ruining relationships. Not prioritizing themselves. Relationship influence. Good personal working relationships. Let it go. Fantastic. You're absolutely right. I'm sure that is why people do that. But it's crazy. Your debtors must pay you on time. You're running a small business, and it'd be really difficult to grow if your customers are treating you like a bank and expecting you to fund their businesses for them. So look, here's the thing. You need the right person to chase the debt, okay? Some of you have put in there that you're worried about ruining relationships. If you are the person in the company that tends to have most of the customer-facing relationships when it comes to the delivery of your product and service, is it appropriate for you to be the person that does the credit control? Raise your hands if you think it is. Silence. You see, nobody thinks it's appropriate. And yet, why is it that I meet so many business owners that do their own flipping credit control? Because, you know, that is, maybe that is going to cause embarrassment. Maybe you feel it will spoil the relationship. So I think it's got to be the appropriate person, but I think that that person needs to be someone who's going to do the managing of the money, the credit control proactively. Someone with the right personality would be a good start as well. So what kind of personality do they need to have? Well, I would suggest that they need to be assertive. They don't need to be aggressive. They need to have tenacity. And I'd say that they need to be extremely well organized as well. You need to have a properly structured credit control system and then stick to it. Often I meet people whose terms are 30 days, but in reality, their debts are, a lot of their debts are 120 days old. Remember, when you are cash flowing someone else's business, you are starving your own. You're limiting your own growth, and you're limiting your ability to reward your team. And you eventually will become a bad payer yourself. So, lesson number 4, not managing the money that you're actually owed. Lesson number 5, not having a process. The main reasons why businesses, I think, have poor cash flow management, and to be fair, the main reasons why businesses fail in many different areas is that they don't have a process in place. So not having a credit control process in place is almost cash suicide. I hear things like, I mean, does anybody raise your hand if you've ever had a situation where a client has said to you, "Oh, I haven't got that invoice. Please, can you send me a copy?" Raise your hand if you've ever heard that. Jeanette's hand went up straight away. I'm sure that resonates with many of you. Yeah, absolutely. Loads of people on the line have heard that sort of thing before. It's a very common stalling tactic. We live in a world nowadays where with email and PDF attachments, it's almost impossible. You've got brilliant software systems as well, like Xero, that send out your own invoices automatically for you. It's incredibly unlikely that people aren't going to get their invoices. So it's a stalling tactic. So we need a structured and timely process. Well, how about a gentle reminder before the invoice is due? Just ask them, have they received the invoice? And then after that, you need a structured process and a timely process to ensure prompt payment, including phone calls, letters, and if necessary, legal action for non-payment. And as with anything else in a business, you have a choice. Either bring this in-house and make it part of your in-house process, or outsource it to specialist credit control companies. Whatever you decide to do, the process needs to be rigid and it needs to be followed each and every time. So raise your hand if you already have a really good credit control process in your business right now. Okay, first person to put their hand up is Teresa. So I'm going to just ask Teresa, can you tell us about your credit control process, Teresa, please?
Yeah, my credit control is looked after by Lee, my PA, because she's really confident and good at, well, she's not afraid of asking for money. So every month, at the end of the month, after we've done all our billing, we send out the credit control emails, and then after 2 weeks, in the middle of the month, for the older debts, then we ring round everybody who's not paid following the initial email at the beginning of the month. But what we're finding is that clients have got used to the fact we've got the regular process. So they know that they're going to get hounded at the beginning of the month, and then they usually pay us within a day or two of that, or the majority do. So
yeah. I hear that a lot, Teresa. You know, that it is one of the downsides, I guess, of having a rigid process, and that is that people understand what the patterns are. But obviously, if the timing is correct and and there's a short space of time between each step of that process, I guess that it still works, does it?
Yeah, and we've also got in the process as well at the point that if somebody's persistently not paying, we've got standard emails that are increasing the I don't want to say threat level to the point that we do refer it to a debt collection agency if they persistently won't pay. But we also have a procedure for limiting services, refusing to do any more work until we get paid.
Okay, fantastic. So again, debt collection agencies, guys, that's another option. So Duncan, you raised your hand as well. Anything to add on the credit control process?
You mentioned Zero earlier, and we're big fans of Zero. So where possible, and certainly in our business, all invoices go out automatically. All clients sign up to direct debit as a condition of working with us. And any that don't get paid, we get an alert straight away. So we don't have a credit control process, so to speak, where we chase up unpaid amounts. We literally just log into Go Cardless and collect.
Fantastic. Yeah, Go Cardless is. Do you want to tell everybody what Go Cardless is in case they don't know?
It's a form of direct debit, and it's one that you don't need your bank to set up. You can go to Go Cardless and create your own account. You send your clients a link, they fill out a form, and then they're signed up.
Yeah. So, I mean, direct debit is a fantastic way of controlling your credit, isn't it?
Yeah. It's certainly a key part of the way we work, and any of our clients who have a subscription-based model, we certainly recommend they use it.
Yeah, absolutely. Is there anybody else on this line here today who either works on a subscription-based model or retainer model? Great. Let's just have a chat to Nick, I believe that is, from Ord Consultancy. Nick, you should be able to unmute yourself.
I'm here, Stuart, yeah.
So tell us about your credit control process,
Well,
Nick.
we don't give credit to clients, they pay up front because we cover their services from the beginning. So they don't pay in arrears anyway. And our clients, like Duncan said, are all on direct debit. So it's paid on the same day every month, every time. And if they don't pay, we get a flag. And then we go into the process mentioned by Teresa, where we start with letters.
Yeah.
I don't know whether it's the right way, but we always start with more of a, are you struggling to pay? Are you having issues? Because businesses don't like to admit they're in financial difficulty, and they tend to pay.
Okay, great. So the important thing is you've probably got standard type letters that you send out, I'm guessing.
Yeah, absolutely, yeah.
I think that's a really important point there. Thank you very much, Nick. I think that's a really important point there, guys. If you want to have a credit control process within your business, a process for me needs to be a step-by-step process that is actually written down. And then the procedure, if you look at each of those steps, the procedure behind it is the actual template, for example, for the letter, or the script for the telephone call, or the template for the standard email that you send out. Now, if you haven't got a process like that in your business at this moment in time, raise your hands if you would like one, please. Okay, quite a lot of people on the line would like one. If you're serious and you really would like to actually see some best practice as to what a credit control process looks like, if you want to email me after this call, my email address is stuartwright@actioncoach.com. I'm sure there's somebody on the line that can put that into the chat box for me. And please just email me and let me know that you would like to have a best practice credit control process that you can follow with standard template letters. Let me know and I'll send that to you. There you go. Charlotte has put my email address in there. Jonah has asked, what kind of charges are related to Go Cardless? Duncan, what sort of charges are related to Go Cardless? You're using Go Cardless, and we do as well, but I have to confess I don't know what the charge is.
It's very competitive. There's a flat fee of, I think it's a percentage, 1% of the amount, maximum £2, I think.
Right. Okay.
It's cheap.
So Jonah, 1% of the amount. Simon Godso said Go Cardless takes about 2%. So I would say, guys, that it is a very, very cost-effective thing to do if you really want to manage your cash flow well, getting your clients to pay. If you are on a retainer or subscription model, then direct debit, that is really, really good. Okay, fantastic. So let's have a look at number 6 then. No financial budget in place. Oh my goodness me. Most people who struggle with cash are just living day to day, hand to mouth. Why do that? You see, you went into business in the first place, I'm pretty sure, to give yourself more life and not have the life sucked out of you with stress and worry. So why not plan your cash flow instead of winging it, for goodness sake? If the revenue you don't expect to come in, if your revenue expected rather doesn't come in, then you're going to need to adjust. So I would suggest that if you're not doing this at the moment, find someone who could help you put some budgets in place. If you're not sure how to do them yourself, this could be your accountant or your current accountant or a new accountant like Duncan or Teresa or a business coach, but set your budgets and stick to them. You've got to know what you've got available to spend and you've got to stick to it. So let me just ask you this question, guys. Raise your hand if you're really good at budgeting your own household expenditure. Raise your hand if you're good at that. All right, so the first person that put their hand up was Tegar. So I'm just going to unmute Tegar. I hope I've got your name right there. Where are you? Let me find you. Tegar. There we go. Tegar, you should be able to speak now.
Okay. Yeah.
Did I get your name right?
Yes, you did.
Okay, so you're really good at budgeting in your household, is that right?
Yes.
So what sort of thing do you do?
So I largely divide it into sort of like food, first of all. So I think that's very important. Sort of like daily toiletries. Then, so I have a spreadsheet that I use, and I know how much for each section that I need to spend, and I calculate how much I'm spending as I'm going. So I'm keeping track of how much I'm spending and making sure I'm keeping it below it. And it's always a matter of if I spend on this item, how much of my budget would I lose and how much would I have left to spend on other things, I guess.
Fantastic. Now, do you do the same for your business?
Not so well.
Interesting. Thank you very much for being honest with me. So, okay, so raise your hand if you could do better in your business with your budgeting for cash. Raise your hand, please. Carl, let's have a little bit of honesty here. Okay, there's not quite as many people as I thought. So if it's true, then potentially some of you are already doing really well at budgeting what you're spending in your business. So if you feel that that is you, if you are doing really well at budgeting for your business, raise your hand right now. Okay, let's speak to Teresa again. Teresa, tell us what you do. Teresa?
Yeah, well, I'm an accountant, so I've got a detailed month by month profit and loss account forecast and cash flow forecast, which I update my cash flow every week against what's actually happened, so I can track what, you know, if there are going to be any shortfalls, you know, so I know exactly what my money's going to be for the next rolling 12 months.
Question for you. Do you actually budget how much you're going to spend or invest in certain areas? So for example, would you have a budget for things like marketing, or would you have a budget for things like administration or telephone calls?
Yes.
Stuff like that? Yeah?
Yes.
Brilliant.
So, because we went through the exercise last year of looking to cut some of the costs. So like telephone is £140 a month, and it crept up to over £200. So we worked on getting a new program in place with a different supplier that got it back below the £140 budget. So that's just one example.
So that's great advice as well to everybody on their line, isn't it? From time to time, maybe once a quarter, to go through every line item on your expenses and see if you can, you know, change your budget, maybe trim some costs here and there. Yes.
Well, quite often too many people will do a budget at the beginning of the year, or they'll do a budget for the bank to get a loan, and then they'll never look at it ever again. It's like, what's the point?
Absolutely crazy. Thank you, thank you, thank you. Thank you very much. Has anybody else got anything to add for the whole subject of budgets, or can we move on to the next mistake that people make? Okay, no hands are going up, so I'm going to assume that we're all now going to be absolutely spot on at setting budgets for every single expense that we have in the business. Okay, so then the next thing, no cash flow forecast. Crazy. Now, this is your projected revenue and expenses. The cash flow forecast will show you what will be in the bank any given time in the future. Raise your hand if you would like to know with some certainty exactly what's going to be in the bank in 3 months time, 6 months time, 12 months time. Raise your hands if you would, please. Come on, some of you don't even want to. Do you know where the raise your hand button is, some of you? I'm absolutely certain that you would sleep an awful lot better if you knew exactly what's going to be in the cash. Thank you very much, everybody. 3 months time, 6 months time, 12 months time, if you actually knew what was going to be in the bank with a certain amount of certainty. Now, okay, things come and go. There are changes that happen that maybe you can't allow for, but we need to have some sort of forecast so that we can be planning for eventualities. You need to plug in all the predictions for where cash is coming from and going out, guys. So who already has a cash flow forecast in their business that is kept up to date every single week? Raise your hand if you do. Fantastic. So let's speak to Petra. Let's have a word with Petra. We've not spoken to Petra yet today. Petra raised her hand. Let's see if I can find you, Petra. There we are. Petra, you are self-muted. You can now speak to us.
Hi.
Oh, is that Petra or Suzanne?
No, it's Petra.
Oh, hi, Petra. So you have a cash flow forecast and you update it every week, do you?
Yes, actually, it was in the session that you had last week. And so we took the time to do it. It was really very helpful.
Okay, good.
To a point that we did it for all the companies that we have. And it is amazing. It's really good.
Oh, fantastic. So do you recommend to everybody on the line that from now on, for the rest of time, they always have a cash flow forecast in place?
Yes, yes. We are going to continue using it.
Good, good.
It's especially important during these next, 3 months, 6 months, however long we're going to be in this really weird time to be in business.
Yes. Suzanne, I'm totally on the same page as you. If anything, if any positives are going to come out of this strange time that we find ourselves in, it would be great if people see the urgency for putting cash flow forecasts in right now, but then it would be great to see them continue the habit after this, because that is one way to be absolutely certain of running a really good business and being in a position to grow your business and know what cash you've got available for growth and know what's going to be in the bank account and what funding requirements you're going to need for growth. Because I'm sure everybody will agree with me on this line today. We all want to grow our businesses because there's no such thing as a business standing still. If your business is standing still, then your competitors are catching up to you. So by virtue of that, that means your business is going backwards. So we need our businesses to be growing and we need them to be moving forward with good cash flow management. Thanks a lot, guys. So here's a question. When would be a good, if you've not been doing cash flow forecasts up to now, when would be a good time to start, do you think? So in your question box, when would be a good time to start doing cash flow forecasts if you've not been doing them up till now? Now, 5:30, now, absolutely now. So I'm going to show you a quick and easy way to get started today. If you've never done one before, I'm going to show you the quickest, easiest cash flow forecast that you're ever going to see. I'm going to go through it step by step. You're going to have everything explained to you in enough detail so that as soon as you finish this call, you will be able to go and do a really good, quick, easy cash flow forecast and stay with it forever. Raise your hand if you're excited about that. Yay! See, I've never seen so many people so excited about doing a cash flow forecast before in my life. Fantastic, guys. Thank you very much. So let's move forward then. What is the mistake number 8 that people make? Well, it's no monthly profit and loss. Too many businesses are flying blind. They only ever look at their profit and loss on a yearly basis. And often this might be as late as month 16, 17, or 18. But these are lagging indicators. These are lagging indicators. Bear with me a second. Let me just lower hands again. Teresa, did you want to add something? If you did, raise your hand. No, okay. Hand was up from somewhere before, no problem. Lagging indicators, in other words, guys, it's history. If it's 16 or 17 or 18 months late, it's ancient history. There's nothing you can do about it. It's really not going to give you much of an indicator as to what's going on. If the bath is leaking, you need to plug the gaps straight away. In other words, looking at your accounts monthly means that you will be plugging any of those holes where cash is draining away in time to stop it becoming a problem. In time, for me, means having the figures for last month ready by day 8 of the current month, so that you're at least reviewing those figures by day 10 and plugging the gaps. Also, I recommend as well is that you have ratios on every line item on your profit and loss. What I mean is every line item is represented as a percentage of the turnover for that particular month, okay? The reason being is because percentages, those ratios will give you a much better indication if things are going the wrong way. They'll be able to quickly see if there may be issues. Even better, have a traffic light system in your accounts where you're comparing your actuals versus your forecast. So if you're using Xero, for example, you'll have the red and green indicators in your monthly profit and loss, where red suggests that you haven't hit the budget that you planned for in that with that particular line item, whether that be an expense or whether that be a revenue line item. Too many people rely on the figures that they have produced for their tax assessments from their accountants. Any good accountant would be holding your feet to the flames over this. We have 2 great accountants online with us here today. Speak to these guys, because if your accountant hasn't badgered you to get you onto monthly figures, sack them. They don't have your best interests at heart if that's the case. So seriously, guys, I'm not joking. Your advisors should be telling you that you need to have monthly management accounts. If they're not doing that, then I really don't believe that they have your best interests at heart. If you wouldn't mind, Teresa and Duncan, if you could just put your email addresses into the chat box for us. So if anybody on the line feels that it might be time to have a conversation with a proactive accountant, then at least people can get in touch with you. So if you could please put your email addresses and maybe telephone numbers as well into the chat box, then anybody who feels that their accountant needs a bit of a shake-up, maybe it's time they talk to somebody that was a bit more proactive. Next, using cash to fund capital expenditure. Big mistake. Paying for tools, equipment, vehicles, plant and machinery with your cash reserves, I believe, is crazy. If you're going to get the benefit of capital equipment for 4 or 5 years, why not? Why pay for it up front? You should structure your debt, in my opinion, over 3 or 4 years. You're better off having the money in your bank account to fund business growth. So, working capital or investing money into well-tested and measured marketing strategies, okay? Your bank will loan you money for purchases for capital equipment, or you can use a hire purchase company to fund them. Remember, cash is king, so don't use cash from Cashflow to fund capital expenditure. Okay, next, final mistake that people make is having no buffer. My recommendation is keep 10% of your annual turnover in liquid cash, or at least 3 months of total expenses if you prefer. Total expenses being your direct expenses and your fixed expenses as well. Having this cash will protect you when rainy days come, and they do come. Or at the very least, you can sometimes use cash that you've got to get better discounts up front for goods and services from new suppliers, but also having a buffer in the bank will help you sleep at night. So there they are. Take a screenshot if you haven't had time to take notes. Those are my top 10 tips on managing cash mistakes that people generally make. So the next thing that I really want to focus in on, really quick and easy, let's talk about right now. Now, I'm sure that both Duncan and Teresa can add to this, because I'm not the world's first and foremost expert on what's available for you at this moment in time. And I'm sure that many of you have already taken some serious measures in your business to be managing cash through the coronavirus lockdown. But there's just a few things on the screen there that you might want to consider if you haven't already done some of these things. Also, one of the things I haven't put on there as well are the grants that are available. So Teresa, first person to put your hand up. Tell us what you know, Teresa.
I was just going to say, in addition to what you've already put there, it's a case of speaking to your landlord and also providers of other finance, such as hire purchase or car leases and that kind of thing, because a lot of the companies are providing payment holidays and support that way. Fantastic.
What do you know about the grants that are available?
So the council, the one for the rate, there's a rates holiday for people in the retail, hospitality, leisure sector. People who qualify for small business rates relief, they can get a grant of £10,000. That's not based on anything other than you having business premises, and you get a bill from the council for your business rates that's saying zero, i.e. you don't actually pay any rates, but you qualify for the relief. So that means that you can get the 10,000 grant. Or there's a higher level grant up to £25,000 for people whose rateable value is between, I think it's 20 and 51,000, and that's if you're in the retail, hospitality and leisure sector.
Brilliant, thank you very much. You're keeping your clients updated with all the different things that are available as well, aren't you?
We're doing the blog as often as we can on our website. At the minute, what we're doing, I've spent all day today making sure everybody has got the pay as you earn as a service on their government gateway, particularly where we look after everything for them. Because you have to have, if you want to claim the furlough for staff, you need to have pay as you earn set up as a service on your government gateway. If you don't, that can delay the repayment of the furloughed wages by anything up to 20 to 30 days.
Right, okay, that's fantastic. So thank you very much for that. If anybody needs any more help on that, then I'm sure both Duncan and Teresa will be happy for you to get in touch and ask any questions that you might have about those things. Thank you very much, Teresa. I really appreciate your input on that. Okay, guys, so let's get stuck into the bit that you've all been waiting for, shall we? In fact, before we do, let me just ask, are there any questions at this moment in time on anything that we've discussed so far? Raise your hand if you've got any questions at all. Okay, no questions. Great. In which case then, let's get stuck into this real quick, easy. So who would like to do this quick, easy cash flow forecast? Raise your hands if you would. Because, you know, I'm getting tired now. I'm not sure if I want to do it. Yeah, okay, fair enough. I'll do it then. Here we go. Are you ready? So watch very carefully and take notes. And if you're really clever, you might want to take some screenshots of the next few screens that I put up, the next few slides rather that I put up. Because if you follow this piece step by step, I've really tried to make it as simple and as easy and as quick to follow as possible. So here's the first thing. Export your bank statement for the last 3 months to Excel. Export your bank statements for the last 3 months to Excel. You should all have online banking now, so you should all be able to do that really easily. So that's step one. Step two, add a new column titled category, and then line by line for each one of those line items, just give it a description. Now, you don't need to be having hundreds and hundreds of different categories. Just break it down into the most generalized categories. Now, these might be similar to the sorts of categories that you use when you're looking at your profit and loss or your cash flow, if you do that already. If you're doing if you look at your accounts that you get from your accountant, those categories, those line items that we're talking about, or if you know a bit about accounts, it's those nominal codes. Okay, so that's step number two. Step number three, really easy, another column, and just add the week number. So if you have a look at the example here on Excel, what we've done there is I've put in the highlighted cell, I've actually put in there a formula equals week num in capitals, brackets, A2. So in other words, what that is doing is it is picking up that the date in A2 is, and then it's actually transferring that over to what the week number is, okay? So then the next step is if you just double click on the bottom right-hand corner of that cell, then what will happen is it will populate all the week numbers for you really quickly. So it's quick and easy to do this, okay? Next step, click on Insert, which is the third tab from the left on your Excel spreadsheet. And the very far left insertable thing you'll see there is called a pivot table. And just click Insert Pivot Table. So that's the next step. Really simple. All of this stuff is simple. Just follow exactly what I'm saying. Every instruction that I'm putting here. By the way, we are recording this session. So if you do miss anything, then you will be able to pick it up on there. Or if you have any questions, I'll be ready to answer questions afterwards. Okay, fantastic. Next step, simply click OK. The area highlighted there, which is all of the spreadsheet you've just created, just click OK on that spreadsheet. Okay, now what we're going to be doing is dragging and dropping certain areas in our pivot table. So the first thing to drag and drop is the amount. Drag the amount at the top there into the value box, into the values box. Next, drag the week number into the columns box. Next, drag the category into rows. And what you'll end up with then is, as you can see on the right-hand side picture there, you've got under columns, week number. Under rows, you've got category. Under values, you've got sum of amount. Okay, so that is really straightforward so far. And then, hey presto, as if by magic, you have produced a cash summary by week. That's the first start. That's the first piece really that you need to have got completed. Next, what you want to do is at the bottom, underneath the grand total, put in the bank balance at the beginning of that week. So remember, you had your bank statement, so you should be able to go back to the very first week of that 3 months that you downloaded to Excel and put in what the bank balance was at the beginning of the first week. The second piece under there where it says balance at the end of the week, you need to put in a sum. And all it is the sum of the grand total, which is in cell B25, plus the bank balance at the beginning of the week, which is in cell B28. And then the result in B29 will be the bank balance at the end of the week. Then for the next week along, all you need to do is to put in a formula for cell number C28 equals the amount that is in cell B29. So in other words, what you've got there is the bank balance at the beginning of the next week is the same as the bank balance at the end of the previous week. And then after that, all you need to do is exactly the same sum as you did in the first column for each one of these columns going forward. Then what you will have is you will just have the bank balance for each of those weeks based on the cash inflow and the cash outflow from that statement that you've got there. So now what you've done is you've now got a comprehensive weekly bank balance summary. And then the next step is the forecast. Now all you need to do is informing yourself of all of those expenses and all of those revenues that happened in the previous 3 months. Now carry forward to the next 12 or 13 weeks, all of those expenses, what you expect to be going out of the business, and the revenues that you expect to be coming into the business. And that includes things like the grants from HMRC, that includes things like your payment holidays, your rent holidays, that includes the furlough amounts that you're likely to be getting back from the government. Don't forget that you will have to pay out those wages before you claim it back. I believe that is true. If that is true, Teresa and Duncan, please raise your hands if that is true. That, yeah, it is true. Good, I've got that right. Thank you very much, guys. And there you have it. You've got yourself a really quick, easy cash flow forecast. So, Duncan, can I ask you to interject for me? Are you there, Duncan?
I am here, yes.
Does that work?
I think that's a really neat way of taking some raw data and making sense of it. So yeah, it looks all good to me.
I mean, the reason why I did it this way, Duncan, is because obviously a lot of people, many people on this call might be using completely different software packages for their accountants, for their bookkeeping, and not all software packages are capable of doing cash flow forecasts particularly easy. Would you agree, or have I got that wrong?
I will agree, absolutely right. And Excel is a great way of getting visibility on the nuts and bolts.
I know you're a big fan of Xero, but are there any plugins that you can use with Xero that give you the ability to do a really good cash flow forecast?
Well, we use an application called Futurely.
Futurely. Yeah, could you put that? Could you just put that in the chat box for us as well, please? Sure. So Futurely, and that's an application that dovetails nicely into Xero, and you can do a cash flow forecast with that, can you?
You can do, yeah. So they've actually developed a CBILS model. So that's the CBILS is the government loan scheme. So you need to be able to show on your bank forecast that you've done all the things that the government have offered in terms of cash flow saving. So you've deferred VAT, you've furloughed staff where possible, you've delayed supplier payments, and you therefore have a cash shortfall that needs to be filled by a bank loan. But you also need a fundamentally sound business as well, because they still won't lend unless they would have lent anyway.
Excellent.
So Futurely we're using that to basically sit above Xero, suck the data out, and then present it in a really nice format, which makes it much easier for the banks to say yes to a loan.
What kind of investment would we be expected to make in Futurely, Duncan?
You can get a license for I think it's about £30 or £40 a month. Right, and
do you feel it's worth it?
I think it's absolutely terrific, yeah. But if your accountant uses it, because it requires a bit of training to get used to it. So if Futurely is a bit heavy duty for you, then there are other options, and I would suggest something called Float.
Float, okay. And does that work with Xero as well?
Float works with Xero as well, and it's a little bit simpler.
Okay, brilliant. Teresa has also put her hand up. So Teresa, do you want to interject for me?
Yeah, I just wanted to add, just to remind people, I know I'm possibly stating the obvious, but when you're using the actual figures as a guide to going forwards, always remember to allow for anything that you know is going to change, because sometimes you don't want to include something that isn't going to be happening for the next few months. For example, you're not working on sites as much, so there's not going to be as much fuel cost and that kind of thing. Other variable expenses that will need to be adjusted for to take into account the change in circumstances.
Yeah, I think that's really good advice, Teresa. Thank you. Guys, yeah, when you do this, if you go through each of these items line by line for the previous 3 months, ask yourself those questions. What's going to change in the next 3 months? Is this something that is this an expense that you're going to be able to avoid? Don't run away from your debts. If we all start running away from our trade creditors in particular, and then let me promise you this, if we run away from our trade creditors, we are all screwed. So please don't do that. Make sure that you're communicating with all of your trade creditors if you are going to find it difficult to pay their invoices on time. Please don't run away from them. Please make sure that you're keeping in regular contact with them. Communication is absolutely key at this moment in time. But go through some of those other ones there and see, you know, are you able to get a payment holiday? If you are going to get a payment holiday, remember, it is only a holiday. You will have to, at some point in the future, pay these things back. So you might want to then start forecasting a bit further than 3 months to see what does the situation potentially look like when it returns to normal. The other thing as well is none of us know when returning to normal is actually going to happen. My recommendation is that maybe you do 2 or 3 different scenarios for your cash flow going forward based on what you know today, okay? Don't necessarily listen to all these so-called experts that are making predictions as to how long this thing is going to last, because at the end of the day, there's nobody that actually can give you that, that advice. Nobody actually knows how long this thing is going to last. So if you've got 2 or 3 different scenarios that you've planned out, then each day you can look at where are we now, which of these scenarios do I think I'm actually on. So you can have a cash flow A, a cash flow B, and a cash flow C. And depending on what new information you're getting, you could jump from one cash flow to another. Okay, so, and again, that's going to be really important as well when you're actually forecasting revenue. For some people, revenue has completely stopped, it's completely paused. For other people, they've got a little bit of cash coming in, they may have some residual bills that are still needing to be paid, and you may be doing your credit control and getting people to pay, and you may even have some of your clients who are slowing down payments. But all of that needs to be taken into consideration when you do your cash flow forecast. Okay, so lastly, finally, before we finish, I want you to just reflect, and we'll have a quick discussion. From this webinar, what have you learned so far? And what's the one thing that you need to do in your business based on this? So if you could just have a quick reflect on that, and then in your chat box, what have you learned so far? And what's the one thing you need to do in your business based on this going forward, please? Give you a couple of minutes to do that. Just go through your notes. If you have any questions that you want to ask, you can put those in the chat box right now as well. If you've got a private question that you want to ask and you don't want everyone else to see it, you can put it in the question box because I can see that privately. Petra says we need to set up a proper credit control. So Petra, if you're looking for a credit control system, just email me after this and I'll share with you a best practice credit control system that will really help you. Jonah says that he learned how to do a more realistic cash flow forecast and will be getting one done before the weekends. Fantastic. Now is a great time to start. Simon, no surprises, just need to knuckle down and do it. Absolutely. The Excel process is great though. Yep, Simon, it's really easy to follow as well. If you took screenshots, just follow that process that I put in there step by step, and as if by magic, you'll end up with a cash flow forecast. David, thank you very much, David. Fantastic session. Thank you for the cash flow forecast system. Duncan, if you'd like to mute yourself, and I hope that cough is not a persistent cough that you've got there. What have we got here? We've got Nyla, how to use the bank statement to create a forecast in Excel. Fantastic, Nyla. So I hope you're going to go away and do that now. Jo is going to redo her cash flow forecast. Fantastic. Petra's emailed me already. Fantastic. How do you do a cash flow forecast? And the importance of planning 2 to 3 months at least ahead. Fantastic. I like to do it 6 months ahead, but yeah, 2 to 3, that's fine as well. Louis, I need to check and refresh my forecast more frequently. You do. How often should you be looking at your cash flow forecast? So the accountants on the line, tell us what's best practice. How often should you be looking at your cash flow forecast? Right now, for example. Teresa, tell us.
It depends on the business. I've had some clients that have done it daily. I recommend minimum weekly because sometimes doing it daily can be a little bit too frequent, but it depends on the severity of your cash flow position. But I'd recommend weekly as a standard.
Thank you very much. So there you go, more frequently. We've got an accountant on the line telling us more frequently should be weekly. Some people at the moment might be looking at the daily. Let's have a look. Jonah got the business grant today, so if any business is in Leeds, it's worthwhile checking. Rudy said he's going to make use of his Cashflow Excel sheet more. Good news, Rudy. Nice to see you. Tor, I need to rewatch the recording for the exact details of the pivot table, but I've used them before, so just need to apply them into my figures. Well, actually, it's interesting you say that, Tor, because the first time I started using pivot tables, I was a bit confused. But actually, there's a really good, some really good tutorials on YouTube as to how to use pivot tables. However, if you've never used them before, promise you, all you need to do is just follow my step-by-step instructions on here, and magically they work. Jeanette, need to make sure that I have procedures in place for people owing me money when I start back up again. Jeanette, if you want that best practice system, email me, I'll send it over to you. I'll even share with you all of the letter templates and the scripts that we use as well. You can use whatever you like in there and throw away all the things you don't like. But I promise you, you'll find that that is a really great system. It works really well. Need to ensure I'm doing a realistic cash flow moving forward, so in place for when I start up again. Do a cash flow forecast for what's happening right now as well, Jeanette. I mean, even if there's no money coming in, it's still worth getting into the habit of doing that. Andre, monthly understanding of profit and loss. I truly live off annual accounts and bank balance. Oh my goodness, Andre. I really hope you've had a blinding flash of the obvious today, and I hope that this will inspire you to go away and get some better money management habits into your business. Chris, prepare different flat cash flow forecasts. 3 different scenarios potentially, Chris, because none of us know what's going to happen over the next few months. Tegan, need to review my client credit limits and be strict with our credit terms. Absolutely you do. You're not funding someone else's business. It's really important that you make sure you maintain those disciplines. I've got a question. How do I stop clients paying into my old bank account despite giving them my new details more than 3 times? Joe, I think you just simply need to go around and insert something where the sun doesn't shine if they don't stop doing that. I have no idea how to deal with that. How do you stop paying clients, clients paying into your old bank account? Close the old bank account down. I have no idea. How on earth would you deal with that? Good question. Teresa, you've got an answer for that, haven't you? Tell us.
I find that sometimes the person that's doing the paying of the invoice isn't necessarily the person that receives the invoice and enters it onto the system. So for example, I personally carried on paying somebody into the wrong bank account because the invoice was going to a colleague, it was getting book kept and I wasn't being told. So if it's a larger business, or you do have that separation of duties, it's a case of making sure you're speaking to the right person. And if it is just a one-man band business and they're not listening, do as Stuart says and go around and stick something where the sun don't shine.
Thanks, Teresa. I love the endorsement for that as well. And Duncan has also added to that as well, Joe. Switch them to go cardless. What a great idea. I think that's a fantastic idea. In fact, Joe, that is a really good idea for you because you are on a retainer model. So if you can get your clients paying on go cardless, I think that the 1 or 2% is definitely worth it. And you won't even have to worry too much about your credit control there. What else have we got? Rachel says, even the notion of having a client credit limit is new to me, although it sounds so obvious. Listen, you know what? Most of the stuff that I teach is obvious. That's why we call them flashes of the blindingly obvious, or blinding flashes of the obvious, or flashes of the bleeding obvious, whichever you prefer. This is when 2 known pieces of information come together and create a spark in your head. None of this stuff is rocket science. It's all simple stuff that works. Charlotte has put amazingly, she has put a little note to everyone about my next webinar. My next webinar is systemizing. Listen, guys, this is a pit stop for your business. If you can come out of this pit stop and go faster, harder, further, longer, and win the race, wouldn't that be a good thing? Yes, it would. Now, a business, 80% of the business is its systems. If you can systemize your business over the next 90 days, because you've got time and you haven't got any excuse for not doing the systems now. If you can systemize your business over the next 90 days, you're going to add value to that business. You're going to save yourself time, effort, energy, money. You're going to make more money. I'm talking about systems that make your business run more efficiently. I'm talking about systems that create great sales and marketing processes within your business. I'm talking about systemization of everything you possibly can. I'm going to be teaching all of that stuff on Friday, the 17th of April at 3 p.m. That's my next webinar. Please, please, please register for that webinar, because if you don't make a use of the time during lockdown to systemize your business, then it will be me coming round to your house to insert something in you where the sun doesn't shine, okay? So, what else have we got on here? Yeah, brilliant. Duncan says, charge clients more for not paying by direct debit. They'll soon switch. Fantastic. I like it. Everyone in this webinar will come out of COVID situation stronger as you're working on the business now. Thank you very much for that, Teresa. And let's have a look. Jeanette, you're asking me what books to read relating to that. Jeanette, what's that you're talking about? Sorry. Systemization. Yes, there flipping well is. So I wonder, let's think about this. So 2 books that I'm going to give you to read that you can get hold of really easily. The E-Myth. If you've not read the E-Myth on the line, then you need to be reading the E-Myth on the line for systemization. Another one is called Traction. That's a brilliant book for systemization. And the third one is Brad Sugars himself wrote a fantastic book called Instant Systems. So there's 3 books for you to start with there, Jeanette. Fantastic. Okay, guys. Well, listen, thank you very much for joining me here today on this webinar.